Good morning, traders. I hope you guys are all having a great weekend so far. I just wanted to take a minute and recap my DGAZ trade from yesterday. So that was January 31st, 2020. I already did a natural gas recap and kind of explained everything that I've got here on my chart. So please do take a minute to look through my other videos because I explain a lot of things there that I'm not going to get too far into on this video. So as we can see here, natural gas has been continuing to play price action between zones and continues in its overall downtrend pattern. So let's take a look at the 1 year, 1 day chart for natural gas. Last winter season, natural gas prices were pretty high, which is starting to fade out here on the 1 year chart. But as you can see, last winter there were some extreme high points, and you can research the fundamental reasons for all of that on your own. I'm not going to get into it on this video. But as you can see, we had a couple of high points leading up into the fall, followed by a dramatic sell-off in natural gas that was due to anticipated higher winter weather and an oversupply. So now we are approaching the 5-year low levels, and it's continued down in this channel since November 5th is where it looks like that started. All right, so let's pull back to the 20-day chart, and you can see natural gas. This is the larger channel on that 180-day chart that we were just peeking at, or 1 year, 1 day chart. So natural gas has continued to trend upwards for a few days at a time, touch the top of that channel, sometimes pop its head over, and then dip back down towards the bottom of the channel, sometimes following a trading range for a few days, making attempts to head back up. Sometimes it'll retouch an old sell-off point. We call that filling the gap, but it has continued to trend down consistently after visiting that higher point in the channel. Let's pull this back down to the 5-day, 5 minutes. So within that larger channel, natural gas has also created a downtrend channel this week, which started, well, really it started the week off there, but I didn't draw the channel lines in until here. So it tested the top of this zone and then continuously sold off throughout the week. So that brings us to Friday. Take a peek here. This is a hypothetical zone that we drew based off of the TPO earlier in the week, and it has mostly traded within this space. We're going to continue watching this demand zone here. These are all new lows for the year that we're working with on natural gas at the moment. It hasn't been in this price zone substantially for the last 5 years. So I took a couple of trades that didn't work out as well as I would have liked them to, because I was anticipating an intraday move based on this being a new zone or area of resistance that the price would bounce off of. We don't know if this zone is going to hold up, but during this week, this fresh zone was identified as an area where the price did not push below substantially. Small dips below, but nothing big. And I'm going to take that as a moment to talk about support and resistance and your risk management strategy. Excuse me. So a lot of people struggle with where to place their stop loss orders, and that's going to be something that you just need to research on your own and develop what your risk tolerance level is. I don't typically place physical stop loss orders in the system unless I'm not going to be in front of my computer, and that's just my personal choice. So I keep an eye on old support and resistance lines, newly identified demand zones, and I keep a mental stop in my mind about where we're going to cut losses. So when I traded in here earlier in the week, I had defined this level as the starting point of where I would consider selling. And the price trended up during the day. It never did push back down below, so we identified that as a new support area. There were 2 touches here, making that a double bottom on this zone, so that gives me some confidence in this as a new area that's important for the price of natural gas. As we can see later in the week, it did tap down below that zone. So if I was going to play based off this zone next week, I would probably place my mental stop somewhere below 1.812. But especially with natural gas, I like to give it a little bit of room to move. If not, I just end up getting stopped out continuously and losing money unnecessarily, when very often it will test that area and then continue on an uptrend for the rest of the day. And there's nothing more irritating than identifying this as what you think is going to be a reversal, taking an entry, I don't know, say here or here, and then having the price retest that just a touch below the low of the day, and then trending back up for the rest of the day. Or say that you had taken an entry here, but we had another retest of that support, but for the rest of the day, the price trended upwards. So had you placed a stop anywhere in this area, you would have been out of the trade before a significant swing up. So it's something for you to experiment with, maybe take some time in the simulator and see what works best for you. But I'm not a fan of arbitrary percentages or dollar amounts. For me personally, I do try to make sure that I'm not losing more than half of my daily profit target or my average daily win. So for example, if every day I consistently win $100, then I don't want to lose more than 50 on a trade that turns against me. But that doesn't mean that I should buy here and then wait for the price to move down here and then decide whether or not I'm going to sell. Now that we've identified this as a zone, if I am watching the price action around here and it does a third touch here, I'm not going to buy anywhere near this top section personally. I'm going to wait to see if the price tests down at this level. I'll enter somewhere in this zone and then have my price or my stop level, my risk management stop somewhere in here. And I'm a discretionary trader and I work pretty heavily on the price action that I'm observing at the moment. So I'm not going to be able to give you an exact spot where I would decide to sell out of that. But I am a fan of giving it a little bit of room to work. And of course, if I start seeing massive red candles falling outside of my zone, I know that there's not another support readily identified until we reach 1.6-ish. And I'm not going to hold on to a trade for that substantial of a fall. So just take some time to really look at your charts, draw your support, your supply and demand zones. Use whatever technique works best for you, whether that's Fibonacci levels or just basic support and resistance levels drawn off of previous highs and lows and patterns that you identify, and use common sense when it comes to risk management. One thing that I've heard recently, and I just keep repeating to myself, is that it's not about how much money you win trading, it's about how much money you lose. So I took a trade earlier this week actually in a natural gas ETN, where I didn't make a great entry. I didn't sell out for a loss. At one point, it would have been a $150 loss, but I wasn't willing to exit the trade because it was still trading in this zone and had not fallen out the bottom. I ended the day by losing 99 cents. And I'm really happy with that trade because that's in my growth account. I am really focused on increasing my profits. And if I have very many days where I'm losing $100, $200, $500, or $1,000, that's just going to destroy my profits. So my focus right now is on risk management, following the trend, identifying the direction, making good entries, and minimizing my losses. So that's what I'm working at right now. We all need to set our own goals and identify what works best for us, and that's going to be part of your edge. So now let's take a look at what I wanted to step in and show you. So I have a heavy focus on pre-market trading. So I tend to wake up around 3:30 in the morning every day, Mountain Standard Time, and I have not been able to trade before 5 a.m., but I like to start trading at 5 o'clock in the morning. Win, Think, or Swim, TD Ameritrade will allow me to start making trades. My goal is to find a solid entry in the pre-market and either make my daily goal before the market opens, preferably before 7 o'clock in the morning, because that's when the rest of my day really gets kicking and I don't typically have time to do much trading after that. So I like to be able to find an entry and an exit that works well for my strategy before or at 5 a.m. to exit before 7 a.m. If that doesn't work out, I like to identify a good entry point before 7 a.m. and then hold that trade for a swing during the day. And I will set an alert to notify me when I should sell, and I will take a break from whatever else I'm doing that day and make a decision about what to do with closing out that position that I took earlier in the morning. So I spend a lot of my breaks and lunch times finishing up a trade that was started earlier in the morning. All right, so this price level that we're looking at here, time level, is from January 31st at 6:25 in the morning. So I was watching the price of natural gas, and as you can see, this is that supply-demand zone that we were talking about. And we call it a demand zone because the price was on a pretty hefty decline. We weren't sure what was going to stop it. It had been declining all week long, just busting through price levels, busting through zones. When it identified first this top section here as a possible new demand zone, and then spiked up, retouched this previous fresh zone, and then had a really substantial fall off down to 1.815, and then identified this as a new demand zone, and the price didn't fall back below that for the rest of the week. So we are looking at Friday, where the price action played up and out of this zone. So I'm pretty comfortable that the price was going to either bounce around this zone or up above it during the day. So here we start seeing pretty strong price movement up and over the moving averages. And again, the moving averages that I use here, this is the 9, this is the 50, this is the 200, this is the middle VWAP. I don't use these as points for myself to enter into trades. I just use them as reference. They're what I'm comfortable with, what I use during most trading days. You will find a system that works well for you over time. So anyway, I'm watching the price action move. We've got several strong bars going up. The price continues moving strongly in this direction. This is a 5-minute chart. And we get to where we're seeing really long tails above the candlesticks. And so what that means is that during the 5 minutes that this candle was open, the price tried to push all the way up here, but the bar ended up closing lower than that. And same thing on this bar, tried to push down below, tried to push up above, but ended up closing not at its extreme high or low. So watching that price movement, and again here with these strong tails up, I wasn't confident that this price action was going to continue for a significant amount of time. And sure enough, I saw this movement happening, and then the next bar opened not high up into the tail zone, but right at this price level. And I continued watching that, began to focus my attention over on DGAZ, and what I was seeing on DGAZ was that the price had pushed down below the 200 moving average on DGAZ, and then we had a nice little reversal signal bar. So that's what this bar was here. So the price gapped from the last bar below the 200 moving average, and then it had a nice long tail trying to push the price lower. That didn't hold. And again, I think everybody should take the time to study the candlesticks. You're going to interpret them in your own way and decide whether or not you want to use them for entries. Because my goal was to achieve my tier. What tier is that now? I recently adjusted them. So I wanted to reach my tier 1 or my tier 2 goal for the day in the pre-market. So I decided to take a fairly early entry on this reversal based on the movement that I was seeing over here on natural gas. Strong green candle followed by a big red reversal candle. And looking at the price action on DGAZ, this candle, which I assumed was going to be a reversal candle, and our location in relation to the 200 moving average. So I made the decision once this second bar opened above the close of the previous and showed signs of pushing up. I entered with a half size position. I normally take a 100 position size on DGAZ. And here, because we just had such a substantial fall and we were so close to the open of market, I decided to go ahead and go in half size. If this had been a 5 o'clock in the morning move or a 5:30, I might have decided to go in with my full position size, but since I didn't have much time before market open, and sometimes the price action starts to change dramatically. We'll see a bunch of institutional buyers come in and the price could drop $10, $20, $30 really, really quickly. So I went in half size so that I would be able to exit in a hurry if necessary. So here you can see my purchase, 50 shares at $278.90. Again, this is the 5-minute chart. So we had 5, 10, 15, and then at the start of the 20-minute candle, I opted to sell out. So that was 50 shares sold at $285 from 278.9. So that's 15 minutes all before my day started at 7 a.m. And as you can see, DGAZ touched that 50-day moving average and then started to trend downwards. So I wouldn't have wanted to be in this trade any longer anyway. And as you can see, I didn't take any other trades for the rest of the day. My goal every day is to meet my profit target, before market opens and prior to 7 a.m. or Mountain Standard Time or 9 a.m. Eastern Time. So let's pop back over here to natural gas and see what was happening at 7 a.m. where we sold out. All right, so this is a great example of why I keep these moving averages and why I pay attention to these zones on the correlating future. So when I decided to sell out here just before 7 a.m., the same thing that happened up here that caused me to buy started happening here on the low side. So we had a big, strong red candle down, and then take a look at the volume and the reversal candle. Price tried to push all the way down here, but it hit the 200 moving average, was pretty close to the zone, and started to push itself back up. And then we get this huge, long wick to the upside, which is a pretty good indication that a reversal may take place. So then the next candle that opens, it's not an engulfing candle quite, but it's another good indication that the price action is going to shift. We had another touch into the top of this zone. It wasn't able to keep the price down below the VWAP, the 50 or the 200 moving average, and then closed up high, followed by a candle that did push through the 9 EMA, still having a hard time pushing the price up and maintaining it during that 5-minute span, followed by a red candle. But as you can see, it's making higher highs that are now staying above the VWAP, above the 50 and above the 200. So if I were trading during the day, this might have been a good place to scalp UGAZ. And if you take a look here, this pattern ended up making somewhat of a double bottom. It's not perfectly even, but that is a pattern that I would see as a bullish pattern. So it would be fairly risky to enter here unless you're really quick and reactive. But this candle over here would have been a great second entry because that's playing out as a double bottom. A lot of people don't like to enter on double bottoms until about this point here. I feel like the majority of the move is already over by that time, so I might watch this price action, take a look at this, and then as soon as the next candle opens above the close of the previous, I would take that for a scalp and potentially for a swing. However, I did not take that trade yesterday, but it looks like it would have been a pretty solid move, and I know that definitely some people made some good money yesterday trading natural gas contracts and UGAZ. For me, like I said, I'm trying not to be greedy, and I don't want to take up my entire day trading, so I was able to hit my profit target. Goal 2, not quite. My tier 2 goal is $260 for the day. My tier 1 is $250. And I think this was about $304, $305, but I'm satisfied with that. And one of my rules for myself is to make your money before 7 a.m. and walk away. I hope that you guys found this video helpful, and I would love to hear from you in the comments, though I may not respond, especially not if you're mean, because I don't have any interest in fighting with people on the internet. If you could, please hit that like button and make sure that you practice good money management. Don't take unnecessary risks that you aren't comfortable with, and always try to lose less than you win. Keep that positive trader's equation in your mind. So try to let your winners run at least twice as long as you let your losers run. Have a great weekend, everybody. Bye.